Level 1, $28,000. You make $28,000 before taxes. The number sits in your offer letter like a fact about gravity. You're 23, living in a city that costs $1,847 a month for a studio with a bathroom the size of an airplane lavatory. Your landlord is a corporation registered in Delaware. You never meet a human being who owns anything. The math teacher's salary breaks down to $2,333 monthly. $1,703 after taxes and health insurance. You subtract rent, you have $144 left for a week of groceries. You eat pasta 4 nights. Your roommate from college makes $76,000 at a consulting firm. She suggests brunch places where entrees cost $24. You go once, order the cheapest thing, calculate that you just spent 16% of your weekly food budget on eggs. You stop going. The gap opens slowly, then all at once. Level 2, $47,000. 3 years pass. You move to a different school. Negotiate harder. The district offers $47,000. You take it immediately. The apartment upgrades to a 1-bedroom for $2,150. You buy a car, used, $340 monthly payment. Insurance is $167. You have $287 in your savings account. Your college roommate is engaged. The ring cost $18,000. She shows you pictures of venues that start at $35,000. You're invited to the bachelorette party in Nashville. The flight is $340. The Airbnb split 6 ways is $183. The dinner reservations and activities, another $290. You go, you put it on a credit card. You'll pay it off over 4 months. At the wedding, someone asks what you do. You say you teach. They nod, say something about how important that is, then turn to talk to someone else. You notice the turn, you file it away. Level 3, $73,000. You're 29. You leave teaching, move to ed tech sales. The base is $73,000 plus commission. In month 4, you close a district contract worth $340,000. Your commission check is $11,900. You stare at the direct deposit notification. It's more than you made in 6 months as a teacher. You buy furniture that isn't from Craigslist. You go to dinner without checking the prices first. Your savings account reaches $8,400. You feel something adjacent to security. Your college roommate and her husband buy a house. The down payment is $140,000. You ask how they saved that much. She says her parents helped. With $85,000, they saved the rest. Her husband works in private equity. You don't ask what he makes. You can guess the range. The distance between your lives is no longer closing. You stop comparing. Level 4, $134,000. At 32, you're promoted to senior account executive. Base salary, $134,000. On-track earnings, $214,000 if you hit quota. You hit it by November. The year-end total is $227,800. You max your 401k for the first time, $22,500. You open a brokerage account, put in $1,000 monthly. You move to a 2-bedroom for $3,200 because you can. A college friend asks to borrow $2,000 for car repairs. You send it. She pays you back in 6 months. The fact that you had $2,000 to send, that you didn't need it back immediately, mark something. You're dating someone who works in finance. He makes $340,000. When you split dinners, he pays without looking at the check. You notice this. On your birthday, he books a restaurant where the tasting menu is $295 per person. You realize you've crossed into a place where this is casual. You don't feel different. The numbers changed. You didn't. Level 5. $280,000. You're 35, running a regional sales team. Base $195,000. Total comp $280,000. You have $67,000 in your brokerage account, $134,000 in your 401k. You buy a condo for $520,000. The down payment is $104,000, wiping most of your liquid savings. Your mortgage is $3,240 monthly. You're rebuilding cash. Your sister calls. She's still teaching. Makes $52,000. Her car died. She needs $6,000 for a replacement. You send $8,000, tell her to get something reliable. She cries on the phone. You tell her it's fine. It is fine. The $8,000 doesn't change your month. This creates a new distance between you. She thanks you 4 times. You tell her to stop. Later, you calculate that you make in 10 days what she makes in 2 months. You were her 6 years ago. You remember checking your account before buying groceries. Now you don't check before buying anything under $500. The shift happened gradually, then completely. Level 6, $520,000. At 38, you're VP of sales. Base $275,000, bonus $145,000. Equity that vests to $100,000 annually. Total $520,000. Your condo is worth $680,000. You have $240,000 in retirement accounts, $95,000 in your brokerage. You meet with a financial advisor. She suggests a Roth conversion strategy, tax loss harvesting, increasing your equity allocation. You understand half of it. You implement all of it. You're dating someone who sold a company for $12 million. He keeps $800,000 in checking because the interest difference doesn't matter to him. You notice this, but don't comment. You go to a birthday dinner where the wine cost $1,400. No one blinks. Your sister calls again. Her school is cutting positions. She might be laid off. You tell her you'll cover her expenses if it happens. She says she can't accept that. You tell her the offer stands. You mean it. The money comes in faster than you spend it. Your savings account has $73,000 because you stopped paying attention to it. You remember being 23, tracking every dollar. That person feels like someone you knew, not someone you were. Level 7, $890,000. You're 42, Chief Revenue Officer at a Series C startup. Base, $325,000. Bonus, $215,000. Equity, worth $350,000 at the last valuation. Total, $890,000. The company might go public. Your equity could be worth $2.8 million, or nothing. You operate in the uncertainty. Your condo sold for $740,000. You bought a house for $1.4 million, put down $420,000. Your mortgage is $6,100. You don't think about it. Your retirement accounts have $520,000. Your brokerage has $380,000. You own $290,000 in company stock outside your equity comp. Your financial advisor suggests a donor-advised fund for tax optimization. You fund it with $50,000. Your sister texts that her daughter needs braces. Cost is $6,400. You Venmo her $7,000. She protests. You tell her to use the extra for whatever comes next. You're having dinner with other executives. Someone mentions their charter to Aspen costs $34,000. Someone else talks about their kid's private school, $48,000 annually. You listen. You don't mention that you went to public school, that your mom was a nurse, that this world was never your inheritance. You've learned when to speak and when to let silence do the work. Level 8, $2,300,000. You're 45. The company went public. Your equity vested to $2,300,000 after taxes. Your total net worth is $3,400,000. You keep working. Your salary is $425,000. Bonus, $290,000. New equity grants worth $180,000 annually. You don't need the salary. You take it anyway. You sell the house, buy another for $2,100,000. Pay cash. No mortgage. The absence of the payment creates a space you don't fill with anything. Your brokerage account has $1,100,000. Your retirement accounts have $890,000. You max everything, use the backdoor Roth, harvest losses automatically. Your financial advisor manages it. You check quarterly. Your sister's school district is cutting benefits. Her health insurance premium is increasing $340 monthly. You set up a monthly transfer of $500 to her account. She tries to refuse. You tell her it's already automatic. You hire a house cleaner twice weekly, $600 monthly. You hire someone to manage your yard, $400 monthly. You pay people to do things you could do because your time is worth more than the cost. This calculation happened without you deciding it. You have dinner with a friend who just sold his company for $67 million. He's talking about his third home. You realize you're still working because you don't know what else you'd do. The money stopped being about survival years ago. Now it's score, position, proof that you can keep doing what you've always done. You remember being 23, deciding between groceries and gas. That person existed. You're not them. You can't get back to them. The door closed somewhere in the middle. You noticed it closing. You walked through anyway.